Market sentiment in the recent few sessions depends entirely on expectations of US inflation data. Are there any other reports that could impact on popular currency pairs? Let's watch a video calendar on InstaForex TV channel. On Thursday, traders will be still responding to the report on US consumer inflation, though not so actively as immediately after its publication. Besides, they will get to know other economic data, including the information on Australia's labour market. According to the consensus, experts project some improvement in October after a crater a month ago, so analysts expect modest employment growth. Nevertheless, the top priority for investors will be an unemployment rate which could have risen to 4.8%. This will be bearish for the AUD/USD pair. During the European session on Thursday, market participants will focus on the preliminary UK GDP data for the third quarter. The national economic output is expected to slow down to 6.8% in annual terms. Besides, GDP growth could come in at 1.5% on a quarterly basis. Investors will be able to judge the extent of a slowdown in the British economy by a quarterly reading. The POO score is likely to trigger sell-offs of the pound sterling. Indeed, economic weakness confirms that the economy is not ready for a rate hike. And last week, the sterling plummeted more than 100 pips in light of the news that the Bank of England refrained from the widely expected move towards a tight monetary policy. This time, the British pound could again come under selling pressure. A bit later, the European Commission is due to publish its economic forecast that could escalate bearish market sentiment on the single European currency. Officials of the European Commission will hardly contradict the ECB rhetoric, so the market will recognize signals that the ECB will carry on with its ultra-loose monetary policy. At the end of the trading week, news from the United States will be on investors' radars. On Friday, the University of Michigan will present a preliminary consumer sentiment index. It's a common knowledge that consumer spending accounts for nearly two-thirds of the US GDP. That's why the consumer sentiment index is viewed as a barometer of trends in the top global economy. The expected rise in the index will certainly cement investors' optimism about economic conditions in the United States. As a result, dollar-denominated assets will close another trading week with gains. We will monitor the market reaction to the above-mentioned reports, subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon.